Hi everyone. Today in this video I've taken a topic from income tax, residential status and incidence of tax. I've taken a question of 14 marks problem. I've given with the explanations, a 14 adjustment is also there. So how we are going to do it in the problem that is concerning to incidence of tax, like ordinary resident, not ordinary resident as well as non-resident, that is being discussed over here. So here I have taken a question of Mr. Tushar. He is a resident. Like computers gross total income for the assessment year 2019-20. If he is an ordinary resident, NOR as well as a non-resident. These are the three situations wherein which we have to do this taxable income or gross total income for this Mr. Tushar. Now we'll just see the question. What are the information they are given? They are given first income from business received in Dharwad rupees 1 lakh. So here the basic concept which is underlying this incidence of tax is that you have to see where is the place of receipt. Place of receipt, that means in income tax terms the place of accrual. The place of accrual, we have to see it where the place of accrual is happening. If the place of accrual is in India, that is in our country, we have to take it that means it will be taxable in all the three situations: ordinary, not ordinary as well as a non-resident. So the moment you get a question in this incidence of tax, what we have to see is that where is the place of accrual has happened, or in another terms it can be also deemed to be arised or accrued in India also. That means deemed to be accrued means if for example if I am working in India for a particular company, a company I'm working, and but for a work they have sent me to the foreign country. So what is happening is that my work and my company is situated in India, but I have been deputed to go outside and do some work. But my salary will be originated in our country, that means in India. So which means that is actually known as place of accrual. So with the place of accrual is in India, we have to tax in all the cases. So that is how we have to just see it. And there are certain few expenses which will be given in the question, wherein which we need not have to take or consider at all in this taxable income, like past untaxed foreign income, all these dividends from domestic company, all these things when it is given, you have to write it, you have to take it in our question, and what we have to do is that we have to write it also that they are exempted. So I'll just come into the question now. The first question is income from business received in Dharwad rupees 1 lakh, then profit from business in UK controlled from India. So here and all, when we see that, we have to see where is the place of origin has happened. So they have given profit from business in UK, but it is controlled from India. So when it is controlled from India, this is a business which is set up outside, like profit from business in UK. This is set up outside India, but it is controlled from our country. So in this case, this will be taxable only for ordinary resident as well as the not ordinary resident. I'll be just showing the solved problem also. Now the next one is income from house property in Japan not received in India. So this is not received in India, but it is received in Japan. So which means that if it is received in Japan or which is received in outside country and all, what we have to see is that where is a place of accrual. So here in this case, if it is Japan, means we can't tax in all the cases. We can only give for a ordinary resident. We won't give a tax it for NOR as well as the non-resident. Next, salary received in India for services rendered in USA. So here clearly we can just see that they have received it in India and the services rendered in USA, but the amount is given 70,000. So we can see easily here it has been received in our country India, so we are taxing it. So like that, all adjustment you can just see that they given relating to interest on deposits with SBI, profit from business in Singapore, control from India, 1/3 profit received in India. This is a common adjustment you will be getting for 14 marks. They can just change the fractions 1/3 or 1/4 and all, or half. These are the ways they'll be giving it for your 14 marks. Now past untaxed foreign income brought to India, this is purely exempted. Dividend received from domestic company, it is exempted. Then interest on post office savings bank, usually it used to be exempted, but here the amount is going to 16,500. I'll tell in this video how it has to be taken. Now next is your agricultural income earned in Nepal, rupees 25,000. Commission received in India for services given for Nepal, rupees 10,000. Now I am just going to explain how it has to be done in a format. The format is, we have to maintain a format: computation of taxable income of Mr. Tushar. Whosoever name is just given in the question, you have to write it. Write the assessment year 1920. Format is particulars, ordinary resident, not ordinary resident. I just mentioned as NOR and non-resident. Now the first adjustment was income from business in Dharwad. So this is received in our country. So we'll be taxing in all the cases 1 lakh, 1 lakh and 1 lakh. Place of accrual is our country. Now profit from business in UK, control from India. So this is a professional setup of business which is set up outside India, but it is controlled from our country. So in this case, you have to be very careful. We'll be only taxing for ordinary resident, NOR and non-resident. Now, the third one is income from house property in Japan, not received in India. Now, the next adjustment is income from house property in Japan, not received in India. So here when it is coming to this house property, so you can just see that house property in Japan they are given, and clearly they are given it is not received in our country. So when it is not received in our country, we won't be taxing it for the not ordinary resident as well as non-resident. Only for the ordinary resident we will be giving it. Ordinary resident they will be receiving this house property income. Next, income from business in India but received in Pakistan. So here you will be having why it is received in Pakistan, but why we have taxed it in all the cases. You have to see that it is received in our country, income from business in India. So this is actually the place of accrual as our country, though it is received as in Pakistan. That is why we are taxed in all the cases. Next, salary received in India for services rendered in USA. So here also you can see that we are renting the service in USA, but where is the place of accrual? It is in our country, India. That is why we are taxing for all the cases 70, 70 and 70,000. Next, interest on deposits with SBI Bangalore. It's clearly mentioned it is place of receipt and accrual is our country, Bangalore. So 20,000 we are taxing in all the cases. Next, profit from business in Singapore, control in India. They had given an adjustment. 1/3 profit is received in India. So here you have to see that this is a profit from business in Singapore. It is controlled from India. It's the same situation. Now you'll be thinking here we have not entered here in the non-resident. But in this situation we have entered. The reason I'll tell, because in the question they given that 1/3 profit is received in India, they had given it, and the amount is given as 30,000. So whatever is received in India, it has to be given to non-resident. So out of 30,000, 30,000 into 1/3, you'll be getting 10,000 only we are giving to non-resident. Rest in other two cases, 30,000 we are giving it. So this, if you get an adjustment like this, if you're mentioning anything in the brackets, you have to be careful. Only in that case which is received in our country, we'll be finding the amount separately for that, and we have to give it for them, non-resident. That is the difference between the G adjustment as well as the B adjustment. Now the next adjustment is past untaxed foreign income. It is given. So the moment you see this, you have to keep it in mind, or you have to write it clearly. This is exempted. We have to write it because it is an adjustment given in the question. Don't think that we need not have to write it, but you have to account it in the format. Now next is dividend received from domestic company. The moment you see it, that is also exempted. Now next is interest on POSB, that is Post Office Savings Bank account. I mentioned it here. It is according to our income tax purpose, like 80 TTA in the under section of income tax. Interest up to 10,000 earned from all saving banks is exempt from tax. Remaining we have to account it. So here in the question they had given for us 16,500. So out of 16,500, 10,000 it is exempt. So remaining we are giving it here 6,500 as well as 6,500. Now next is agriculture income earned in Nepal. So this is actually earned outside Nepal, we have getting it. So we are not giving it for the NOR and the non-resident. Only for ordinary resident we are giving 25,000. Now the last one is the commission received in India for services given for Nepal. So here also received in India they have clearly mentioned. So the moment you see it is received, place of accrual or place of receipt is in our country, we have to give it for all the conditions, that is ordinary resident, not ordinary resident as well as the non-resident. Finally, we have to total each and everything separately. That is taxable income. You will be getting 4,01,500 for your resident, ordinary resident, 3,26,500 for your not ordinary resident, as well as 2,46,500. Thank you for watching.